Thanks for joining me today. Since my last podcast, we've seen inflation holding at 2.2%, along with no change in the base rate. Challenges still continue. We still have volatility in the market with swaps, leading to rate changes and advisors having to move fast to secure a rate. For brokers, it's all about maximising solutions, but at the same time safeguarding clients. Looking forward, we've got the autumn budget on the horizon, and what will this bring? Then there's the US election, which is intriguing. Who will win this race? Well, for today's podcast, I'm joined by Steve Hewitt, National Account Manager at Aldermore. We're going to have a chat around the market in general and what we can expect in 2025. I'm looking forward to this. So without further ado, welcome, Steve.
Hey, Anita, how are you doing? You okay?
Not bad, thanks. Not bad at all.
Good.
Steve, let's start by first asking you, what's happening at Aldermore at the moment?
A lot's been happening over the last 12, 18 months with Aldermore. We've had a number of changes to our proposition, whether that's through our residential or our buy-to-let proposition. And this year was very much a focus with our residential proposition. And earlier this year, hopefully your members will have noticed that we came out back into the market with our high LTV products, which was well received. And that's obviously helped an awful lot of residential customers. Whilst they're not particularly developed for first-time buyers, they are there obviously for home movers as well with a smaller equity in a property. They've been wildly accepted in terms of our sort of first-time buyer opportunities where brokers are looking for customers where they've got smaller deposits. And I think, as you know, we've sent out numerous communications over the last few months regarding sort of first-time buyer index that we carry out each year. And we've just done the recent refresh of that. So hopefully we'll get that across to you over the next few weeks anyway to distribute, which will be good news. In terms of other changes, obviously affordability has been a key aspect of the market for the last couple of years, especially with rates going up way above 6%, which has certainly impacted the customers in terms of that affordability piece. And in specialist lending like Aldermore, we've looked at how we can support those borrowers with increases in terms of our percentage of allowable income, whether that's bonus, overtime, commission, bank nursing, benefits, income, all those sort of things where we didn't used to or have them as part of our criteria. Those changes have come in over the last couple of months, and they've really started to have an impact where brokers are now being able to use. I'll give you an example of one where someone has a second job. We're seeing more people with second jobs these days, which they're looking to try and support their income and help them out on a monthly basis from a budget perspective. But lenders are now starting to use that second income, which is really helpful and important to those borrowers looking to borrow the money on the mortgages. And obviously from that perspective, it's helping increase on those acceptances as well. More recently, we've come back into the sort of contractor market. We always used to sort of base a contractor on a sort of self-employed SA 302, but now we're looking at day rate. So again, all of these things are really important. And whilst they all may seem small and quite insignificant in their own right, combined together, they've really had an impact in terms of those residential opportunities, whether that's a purchase, whether that's a remortgage, whether that's self-employed. And self-employed is one of those areas that we've always championed and, been able to sort of support that client bank with income and how it's derived. We're seeing more complex incomes coming through. And the ability to be able to use, from a limited company director perspective, salary, dividends, or salary and retain profit after tax has really helped because of those sort of thresholds that we have for that increased affordability at sort of 5.5 times income, which means if someone's got over £60,000 income, whether that's solely or joint, we can go up to sort of 5.5 times income. And I think one thing that we do try and make sure is that we don't have separate policies or criteria or products for the self-employed customer. So if you're a residential employed customer or a residential self-employed customer, the proposition is exactly the same. So quite a number of changes, which has really helped us over the last 6 to 8 months on our residential proposition.
What about the buy-to-let market? How do you see that then, Steve?
We hear lots of noise from the industry and lots of change in terms of regulation coming in. We've had a new government recently, and obviously the previous sort of renters reform bill has now turned into the renters rights bill, which means obviously from that perspective, it's very similar in some respects, but clearly from the no fault eviction and the section 21s that they're looking to bring in, we will just need to ensure that we keep an eye on that over the next couple of months to see what that means to the landlords, because I think there's a few people out there at the moment in landlord world, which they think things are going to get really difficult. We
Yeah,
know from the market that buy to let, and we get a lot of noise on this, it's dead. We don't see that as a lender. We see the opportunity, and what we are seeing from sort of the conferences that we go to, and I went to the NOLA conference last year, and it's very much focused on professional landlords because that's their job, that's what they do, that's their income, that's what they need to do every single day of the week to earn an income. And it's all very much that we see more diversity now in their portfolios rather than the sort of traditional properties that they would have gone for previously. The market's saying that people are selling up property, given the
yeah.
challenges they're facing because of profit and also the
Hmm.
regulatory changes that are coming down the track. So I think from our perspective, what we are seeing is that there's the rise of the specialist landlord, if that's a coin of phrase, where
Yeah,
they are looking to diversify portfolios, whether that's through looking at HMOs, multi-unit blocks, multi-unit freeholds, and making sure that their portfolio is fit for purpose. So we could see landlords who are currently portfolio landlords sell off some of their property, which isn't performing for them, and
mm,
reinvest that money back into property, which will be performing for them from a yield perspective. So it's all about how can landlords now look at diversifying their portfolios, and brokers are talking to us about that. Clearly, from a specialist lending perspective, a lot of specialist lenders like Aldermore out there have good propositional opportunities for them. And one of the areas that we have is the multi-property product, and that's been very well accepted by brokers, where we can combine anywhere from 2 up to 30 properties on one application, which means that we're actually blending the loan to value and blending the
right.
ICR hurdles, which is proving very useful. Because when you're looking at remortgaging, and we are sort of entering into that period again, aren't we? And sort of coming
Yeah.
up where there's
Hmm.
going to be quite a tranche of product terms coming to the end. So this will allow somebody who's got a portfolio rather than remortgaging individually. And what we're seeing is that some property won't fit either the ICR or the
Mm,
LTV. So where we have a portfolio, some of them are performing, some of the properties are performing, and some aren't, we combine them. And that helps the broker, helps the landlord then remortgage those properties. And it means that what we've got is one application. It means it's one set of docs, it's one underwrite, and then more importantly, for overall cost, it's one fee. And it also means that the broker, from that perspective, is spending less time on an application. And the customer, the landlord, has got one direct debit for the whole of that portfolio. And that's gone down really well with brokers, especially with their portfolio landlords.
so for advisors listening to this, they may not be aware of, what specialist things you can do with the buy-to-let market. Do you have actually specialist BDMs out there? So, if you've got an advisor now who thinks I've got a case I could really want to chat through with Aldermore, what's the best route for them?
I think there's two ways of looking at this. We have quite an extensive telephony BDM team in the office, who are more than happy to take a call from any prospective broker around any particular case, not just buy to let, but residential. We also
Mm,
have trained field-based BDMs who are very much on the case in terms of any opportunities they can look for. And I think you're right, it's a good question, because when we go to various events, we see brokers, we can talk to the cows that, you know, in
mm.
terms of criteria. We can talk to them till they come home. But I think what brokers are looking for today, and we're seeing more of this with our field-based BDMs, is, and I open this out to whoever's listening to this today as well, please reach out to your BDM. They're more than happy to come in and have a conversation with you about any particular case. But more importantly, they're more interested actually in coming in and helping you develop and grow your business and look at those opportunities. So education and training is becoming more of the question that we're seeing from brokers when we're doing events, broker visits. They want help and support to help them grow their business. That's exactly what they want. And I think a really good BDM who can go in and have a short session around a particular subject, whether that's buy to let, whether that's portfolios, whether that's limited company, whether that's first time buyers, or whatever they're looking to specialize in, we can certainly help from a BDM perspective, whether that's face to face or even like we're doing today through some form of webinar. We're more than happy. So I'd really stress that, get in contact with your BDM to discuss your requirements on that basis.
Yeah, I suppose what we're saying then, a lender like yourself, who specialises in the market, it's not all about adverse, is it?
No, it's interesting. I mean, I've been with Aldermore just over 14 years now since we launched. and that's a long time, and a lot has changed, especially in the market, not just in Aldermore. Adverse adverse was always seen back in 2010 as the sort of the opportunity, I think, in terms of the specialist lenders, but they've evolved, they've changed, and I think we see a lot of our business, even at higher loan to value, or even the self-employed, or even your employed customers, they're very clean. They're not just adverse customers. There's just something that's not quite right for the high street, and they just don't fit the mold.
Yeah, a little blip, isn't there?
Yeah, it's just little blips. And lenders do fluctuate in terms of criteria and credit scorings and all those sort of things. And it can be as easy as submitting a case today to a lender and it getting accepted, and a similar case the following day and getting declined. And it's really about understanding each of the lenders out there in the market and how they can support you. But you're right, we're not all about adverse. Don't just think about specialist lending for adverse. We're so much more than that, especially around the buy-to-let market and space as well for your portfolio landlords, but more so again for your residential customers, whether they're first-time buyers who could be failing score or have got a lower deposit, and meaning that they can't get onto the property ladder. And I think there was interesting some facts that we took from our first-time buyer index around the sort of first-time buyer market, was from the people that we surveyed originally. Out of that 2,500, there was only 36% of those that actually went to a broker. The rest had gone out to their bank and they were declined. So it's one of those, again, I come back to that education piece, isn't it? How can we help your brokers, your members out there, to sort of look at market and opportunity today and what's coming down the track, as you rightly say, what's going to happen in 2025?
Yeah, I think you summarised it up well there. From your point of view, with you being able to look at second jobs, I don't think I think advisors have got to realise that there are lenders out there who do that. The self-employed, how lenders have they've changed their attitude, in my personal opinion, towards the self-employed. They've been a bit more flexible with them. Would you agree with that?
Yeah, I think self-employed, if we're looking at certain lenders, there's some really good lenders out there in high street world who do it, but there's some that just can't get to grips in terms of their income and how they're structured. It is understanding their business. It is understanding where the income has come from, and obviously the evidence of that. It's got to be earned declared income at the end of the day. So we need to ensure that we can prove that. But it's having that manual approach, that manual underwrite, and really understanding. And the broker is becoming very good at giving us, I don't want to be sort of story like a Jack and Ori story, but it's almost like a story around their business has improved because of X, Y, and Z. The reason why their income has gone up over the last 12 months is because of X. So it's all about us help the broker helping us understand what that client is doing, so the underwriter can get a full picture about that particular client, and sitting down and really underwriting that case based on facts. And I think that's really important. It's all about the story with the self-employed customer. But, having that sort of lens over the overall business makes a big, big difference, and making sure that we've got the right decision for that customer.
Yeah. There's sort of like the challenges for brokers out there. What opportunities are you seeing out there, Steve?
Opportunities. I think it's been a difficult sort of 18 months, 2 years, hasn't it? Let's be honest. I mean, 2 years ago, we were in a different world altogether to where we are today. We've gone through all those rate hikes. We've gone through all of the challenges around the PTs in terms of making sure that it's the right product. And I think the opportunity now, one of them is obviously the remortgage piece. We are seeing an opportunity coming up over the next quarter where that's the biggest sort of uptake again in terms of products coming to the end of their term. I really genuinely believe, rates are now, we can see, especially around the high street, there's a price war. Rates are becoming below 4%, which is good news. I think from their perspective, if you're looking at a customer coming to the end, and the biggest thing you can do is make sure you keep hold of your customer. That's the biggest thing, because that's your lifeblood at the end of the day, isn't it? Let's be honest. But if you have now an opportunity, and I really do think there's a cusp, there's the edge now where it's no longer you would do the advice piece and think, well, actually, given the circumstances, I would propose a product transfer rather than a remortgage based on the circumstances of that customer due to the rate and the affordability. Whereas now I think it's the right thing to do, to look at and think, well, actually, is that the right choice? Or can we look at the customer and do a remortgage rather than a product transfer. So I think that's a big opportunity to really start to delve into your client bank and look at that and make sure that you, obviously, as you do as brokers, you've got to get the right outcome for the customer. So I'm convinced now we're at a point where there's that element, because we know if we'd have gone back 12, 18 months ago, affordability was the barrier.
Yeah, definitely.
That was the challenge in terms of getting a remortgage. Plus, I think customers at the time were very much skeptical and thinking, oh, I'll just hang on here. I'll just think about what's going to happen in the future. And we're really starting to see that element now where people are coming to the end of those terms. And even after 2 years where they've had bigger rates, they're going to be better off. Rates have come down.
I think you've hit the nail right on the head there, Steve. I think people have got used to the rate being, whether it's a 4%, it's not 6% anymore. They're getting used to that rate, aren't they? So instead of sitting back and thinking, oh, I can't afford it, they're now saying, well, if it's 4%, whatever, I think I can now look at either remortgaging or moving on or whatever. There's now opportunity out there.
Yeah, I think there's that overview of the customer as well is important. There's a protection piece. A lot of things to change in 2 years. What do customers, are they going to be thinking about moving? Are they going to be looking at maybe doing some home improvements? That's now where confidence is coming. We're seeing it. We're seeing that confidence return to the market. And I'm sure as we are, I don't like the word busy, but that's where everybody is. They're really busy at the moment. There's so much opportunity out there. And I think PTs and remortgaging is that element now of that cusp. It's just on the edge, isn't it, in terms of making sure that I think now for a lot of brokers, it's all about remortgage rather than thinking about a PT.
Yeah, it's really the broker, I suppose, with everyone's help, diversifying their business and then looking to see what opportunities are there for them.
Yeah, I think when we do events, we talk around specific subjects. First-time buyers is one of them. A lot of brokers tend to focus on buy-to-let, and likewise, a lot of brokers tend to focus on residential but don't focus on buy-to-let. I think that they're seeing some customers that come to them, they think, oh, this looks a bit tricky, I'll pass it on to somebody else, which is fine. But if there's an opportunity out there for them to look at, and from a buy-to-let perspective, we're more than happy to help with education. And from a residential perspective, we're also more than happy to do exactly the same. So think about self-employed customers, think about your own area, think about your region where you're working, your client bank. One opportunity, we know, let's be fair, you've got now probably people who you've been helping for the last 20, 30 years, maybe, on your client bank. Are there any siblings, children on there who are looking to get onto the property ladder? Are there opportunities with those people? So there's many things out there that we can start to think about in terms of those challenges that they've been facing into. But I think we're coming out of those challenges now, and opportunity is very much on the forefront of brokers' minds and how they can grow. And I use this sort of analogy. If we look at sort of retail, I don't know if you've been into the supermarkets and the shops recently. What have you seen on the shelves? I walked in on one on Saturday and they've got Christmas trees. So, it's all about being prepared and look forward. They're always sort of working a quarter ahead of themselves in terms of the market themselves. To start to think about that as well is get yourself thinking now about 2025. What do you want your business to look like in 2025? Think about where the market opportunity is coming to you and get yourself prepared for it. And I think that's really, really important. We do as a business, I'm sure you do at the Right Mortgage Network, get yourself sort of already had conversations about what you're going to do in 2025. It's really important to have a plan and a business plan around where you need to sort of focus. And we're here to help. Absolutely here to help.
Brilliant. Moving on then, artificial intelligence. Any sort of thoughts around that?
I think it's a really interesting. I think there's a great opportunity. Whilst most lenders and most people now are looking at how they can improve their service proposition through AI, I think there's cautious optimism in terms of it, because they need to think about how you can use it in the best possible way and what's going to give the best possible outcome. We've seen a lot of industry press, a lot of national press around AI. I think if it's used in the right way, for the right reasons and for the right outcomes, I think it's a fantastic opportunity. And brokers really now need to start thinking about how they can use it in their business to support them in terms of not just like a marketing campaign or whatever, but it's how they can use it in their business to be able to sort of improve it, make it easier for them, give them some time back. Because I know a lot of lenders like ourselves have that opportunity now, and we are using certain elements of AI in a good way to be able to process cases. So it's working in the right way. And I think that's the challenge, isn't it? But when you think about the industry as a whole, there are various segments of our industry. We've got obviously lenders, you've got brokers, you've got yourselves in distribution with mortgage clubs and networks, you've got conveyancing, you've got the solicitors. There's many component parts to our industry. And it's all about how are we going to adapt to those changes with AI. It's fascinating, you know. I think I've mentioned previously around, someone mentioned that they could actually create a song just by giving something 3 words, and they did. It staggered me, it really did. So, you know, it was just, I was sat there thinking, how on earth has it done that? Creating documents, creating marketing. But I think it's still, the fact is, don't just think it's going to take away that human element, because it's very important we check all this stuff manually before you do anything with it. But I think it's an interesting conversation. I think it's going to evolve, it's going to adapt, but I hope for the right reasons. And I'm sure as a network and distribution yourselves, it's going to form part of your strategy and planning over the coming years.
Yeah, I think it's, you know, it's all the cogs out there, isn't it, in the wheel. They've all got to sort of like come together. Yeah. And I think, you know, you're right in what you're saying. I think, you know, lenders are embracing it. Networks, clubs, etc. are looking at this. And I think it's sort of like stepping out and looking at sort of like the conveyancing side, the solicitor side. What can they do to move it all forward? So I think we're part that one for the time being, Steve, and maybe have a catch up on that maybe next year and see where we are with it all.
Yeah, be interesting to see how that plays out over the coming year as well.
Yeah. So next question for you then, Steve. Looking at the remainder of this year in 2025, can you share your thoughts on that, or any plans that you as a lender have going forward?
I think from a market perspective, we've seen recently, obviously, Bank of England reduced rates, which is good news. The previous announcement was to hold. A lot of our sort of economists are predicting rate decreases over the coming months. Do I want to commit to a date? It's difficult, isn't it? I think, you know, we can all assume. I think the latest results was 8-1 on the MPC committee. I genuinely believe, you know, people see the inflation rates being at 2.2 currently, but what I don't think people see from the sort of the normal daily news is what the MPC are looking at and considering as the round. And one of those elements is core inflation. And I think that's currently around 3.6%. So I think they're waiting for a little bit more stability, I think, in terms of those inflationary figures before they make a decision. All of that said, obviously lenders are predicting rate decreases, so therefore have kind of baked in rate reductions over the last couple of weeks, which is great to see. So they're fairly confident. And I think the economists within those businesses like ours are confident that rates will come back down again. Just by how much and how quickly, we will have to wait and see. But going into 2025, there is an air of optimism. There's an air of confidence, not just from the consumer, but also from brokers. And, you know, from some of the stats that I look at on a weekly basis around the number of properties that are being listed currently, that stands at around about 10% increase year on year in terms of number of properties being listed for sale. And obviously from net sales per year, that's up by 15%. So the confidence is coming back from the consumer. And that is absolutely critical in a market that we play in. You know, I think the customers, as you said recently, you know, you said before on this podcast, is I think there's an element there where people may well have just been sort of sat on their hands a little bit and thinking, oh, I'll just wait. But I think they're getting to a point now where they're starting to realize actually this is the new norm in terms of rates and the fluctuations. Potentially, I think if we look at our economists, they estimate hopefully by the end of next year, and I'm really putting myself on the line here. But if we look at sort of towards the end, the back end of 25, there were talks around base rate being around about 3.5 to 3.75. So we've got a number of rate reductions coming, hopefully down the track, fingers crossed. Yeah. But at the moment, in the here and now, there's an air of confidence, and people are starting to sort of wake up and come back to life and looking to do something, whether that's a purchase, move home, remortgage, look at their protection potentially. Again, there's all these things now they're starting to, and confidence is growing. So we'll see what happens and how it plays out towards the end of the year. We're hopeful. They were talking around November for a rate reduction, which would be welcome, obviously, but we'll again just wait and see from that point of view. But going into 2025, be prepared. I think now start to think about your business, start to think about where you want to focus on in 2025, and learn from what's gone on over the last couple of years in terms of how you can streamline your business, how you can work with lenders on specific areas around different opportunities, whether that's residential, whether it's buy-to-let, whether that's bridging, whether that's seconds, whether that's anything within the realms of what we do in our industry. So I think it's really important to sit back and maybe just have a little think now, going into the last quarter, where do you need to sort of focus in 2025?
Steve, totally agree with what you're saying there. There's lots of optimism out there. From my point of view, where I live down in West Sussex, a lot more for sale selling's going up. So I think, as you said, there's a lot more optimism out there, and it'd be interesting to see what happens in 2025.
It certainly will.
So, well, Steve, thanks for joining me today. I think that was very thought-provoking. Be good to get you back next year to see how the market has reacted to the events we've discussed.
Really, really appreciate it, Anita, and thank you for taking the time to let me join. It's been great to have a conversation around the market and what we're doing, and particularly what we can do to help brokers.
Brilliant. Well, as normal, we'll include any links with the podcast, along with Steve's contact details, who I know will be happy to answer any questions, so do feel free to contact him. This leaves me to say thanks for listening, and look out for my next podcast.